Hi, this is Jack Crooks from Money and Markets TV. Many people think China is well on its way to supplanting the United States as the world's dominant superpower with the most vibrant economy. But I believe there are some big obstacles in China's way. And the best way to see those obstacles clearly is to look at what happened to Japan more than 2 decades ago. During the 1980s, Japan was in a similar position to where China is now. It had a powerful export machine and massive surpluses in its current account balance. But the U.S. stock market crash in 1987 and the recession that followed completely changed the game. Within 2 years, Japan's own stock market cracked and the bubble in its extremely overpriced housing market burst. Japan authorities did all they could to keep the bubble inflated. They pumped more money into the stock and property markets through direct stimulus. They lowered interest rates to zero. They subsidized big exporters. But it didn't work. Demand from the biggest buyer of Japanese products, the United States, dried up as we entered a recession. And the artificially low interest rates encouraged domestic consumers to save instead of spend. The result was what is now known in Japan as the lost decade. Fast forward to China today, and the parallels are eerie. Instead of a stock market crash, we have the credit crunch, arguably a much bigger and more powerful global event. And the recession the U.S. has struggled through for the past 3 years has been much worse than the recession of 2 decades ago. As a result, China's exports have started slowing down, just like Japan's did in the late 1980s. And what has China done in response? They've made many of the same mistakes Japan did. In fact, China injected its economy with direct stimulus equal to about half the country's GDP. And predictably, the results have been similar. China's hot stock market broke in 2007 and is now 59% off its high. China's real estate prices have started falling, and it's apparent that the bubble there is about to burst. There are already signs that the hot money is pouring out of the country. And just like Japan, China is trying to desperately reverse the tide. They're pumping more money into the stock and property markets, but domestic demand just isn't there. They're subsidizing export companies, but demand for their products around the world is drying up. Interest rates are still above zero, but they're extremely low for a country supposedly growing as fast as China is. This easy money policy is encouraging savings and smothering domestic consumer spending at a time when it's most needed. But perhaps most of all, China has continued massive fiscal stimulus by building infrastructure across the country. This has led to extreme overcapacity across many sectors. And if global demand is not there to buy up the goods that this policy produces, much of that capital goes to waste. The similarities to the conditions that preceded Japan's lost decade are truly eerie. And it appears that the policymakers have either learned very little since then or are unwilling to do the heavy lifting of real global monetary reform. If the Chinese economy plays out the way Japan's did when its credit bubble burst, the implications for the global economy would be dire. As I continue to watch China tick off the same historical markers that led to Japan's decline, I'm hoping that history does not repeat itself. I'm Jack Crooks for Money and Markets TV. Thanks for watching.